Good morning, everybody. Mike Vaki, Princetontrader.com, here for ntmarkets.com with your Monday morning pre-market webcast. Okay, S&P 500 E-mini futures daily chart. Just a quick review from last week. We talked about how this green candle here wasn't going to get you anywhere that you wanted to go if you were a bull if it couldn't get over the middle band, the middle Bollinger Band, the 20-day simple moving average. It failed on Thursday morning, just as the tests of major resistance here and here and here had failed as well. So you have four major resistance fails. That turned into a retest and a break of the 1918 lows. And the 1918 lows, the bulls really just had to have. They had to have those matching lows. It lined up very well. And once their theory didn't pan out, then as we discussed on Friday, the 200-day exponential moving average, the purple line, becomes what it has been all along, which is a magnet. It has been well over a year since we had touched it, and once 18 was broken, then we had another low at 11 on Friday. That was broken, and then another one at 06. Once it started to reach down to that third low or so at the end of the day on a Friday, you're just going to see, what you see is buyers just say, you know what, I'm done playing this game. I'm going home and let this kind of work itself out. And that's what happened Friday into the close. We closed below the 200-day exponential moving average, so we touched it and we closed below. Sunday night we opened up and we tested the 1880 area. What I told my subscribers in the evening webcast last night was, look, if there's a major area that you haven't touched and you break through it like we just did and do 18 handles below it almost instantaneously, the chances of that not being retested as resistance, that's very unlikely. So the last thing you should have been looking for last night was like more downside from the downside that you already had. I mean, essentially, you had done a rejection up in the 30s. You had come down to 1880 in less than 24 market hours. Okay, you had done 50 handles, but it's not really so much about the handles you do. I don't like it when people speak in those terms. Well, we got to go up because we're down. That doesn't work. What I told my subscribers, and the reason in the room we bought 82.5 was because it was very unlikely that the bears are going to get anywhere that they really want to go until they test the purple line, the 200-day exponential moving average, and it holds as resistance on a closing basis. So that's what we did in the overnight. That's what we're doing right now. We are testing the 200-day. The 200-day is at 98.31. We're trading 99. I expect it to be a battle all day around that area. So I've taken some profits for my 82.5. I still have some on. I exited my short from Friday that I had. I took one in the afternoon from 1918. We took profits on that all the way down. I'm out of that now, so I just have the one long trade from 82.5. I want to get back short, but I'm going to be very patient. There's really no reason why you need to rush into that. Is this ultimately a sell rallies market? Absolutely. I mean, it's a very easy call to make because we're living below the 200. We're living below the middle band. We knew it was a sell rallies market here, up at 68.5. But down here, when you get down to 1880, you have to understand, you can't sell rallies without a rally. And when you're 18 handles below a big area like that, you got to be thinking about long more than you need to be thinking about short. So we'll see how long this long lasts, no pun intended. And I'm just very curious to see. We're at a huge juncture of the market. We are absolutely at a crossroads. Does the mini want to trade above or below the 200-day exponential moving average? The Russell wants to trade below. Does the mini, does the S&P, does the ES follow? That's what this week is going to tell us. All right, so everybody have a great one. Check us out on Twitter. Come follow us at Princetontrader. I posted some of the excerpts of subscriber webcasts from last week, particularly Wednesday night when we were doing the bear market rally, and then Thursday night after we hit the high and did the drop and made the call that we were going to continue to move down to the 200-day exponential moving average. I think I'd like to give you the whole subscriber webcast, but I can't because there's proprietary stuff on the back end. So I gave you the first half where we're talking about the market. I think the value of that stuff speaks for itself. So check out the website at Princetontrader.com. Come check out the chat room. It's been a fun, I'd like to say it's been a fun week to be a member, but honestly, it's been a fun couple of years to be a member. So come check it out. We would love to meet you. And if you trade this stuff all the time, we absolutely can help you. So have a fantastic day. I'll be back tomorrow morning with another webcast. Trade them well.